About 350 billion naira was what the Debt Management Office says it will be rolling out as debt auctions on behalf of the Nigerian government in third quarter, and that's starting from today. There'll be 3 installments in July, August, and September. That's what the calendar says. But this is the biggest size that we've seen since the new year started. Let's talk to Jolomi Odonkaro, who is the fixed income a market lead at Meristem Securities. Meristem Securities is one of the licensed stockbroking and investment securities trading firm licensed by the SEC and the Nigerian Stock Exchange. Jolomi, thank you very much. We appreciate your coming. Okay, let's start from the size. When you looked at the calendar, that figure looks really scary. Oh,
it's a large size, but only about 30 billion more than last quarter. So it's it's a sign that they have to borrow more, and we can tell that by the size of the budget. But it's not significantly more than the last quarter or the quarter before, really.
But 30 billion is a lot of money these days.
It is.
Look at where the market really is. So, in terms of what the papers will look like and where we were in the first and second quarter, what do you think the market situation will look like in third quarter that will allow this money to come in, looking at where yields are currently?
Okay, no. With regards to yields, there's been a lot happening in the market, which caused yields a lot of volatility in the rates in the first and the second quarter. Things like the increase in the NPR. But right now, what we're facing is quite reduced liquidity in the system, given the institution of the new FX market and the fact that a lot of banks have to transact in that market. That's reduced system liquidity from a high of about 1 trillion in the quarter, just over 1 trillion in the quarter, to about 210 billion at the start of trading yesterday. So now that impacts the market because the demand levels will not be quite as high as previously, and what you should see is a little hike in rates in the market. So now, over the bonds we're seeing right now, the 2021 is the new bond that's going to be auctioned during the quarter, and we're thinking about rate in the range of about 13.6 to 13.8 based on the current market level of liquidity. As time moves on and as closer we get to the auction, depending on what's happening in the market, you might find that the rates will hike up a little bit because demand levels won't be as substantial as they are right now. But all the way to the long end of the curve, we don't see it exceeding 14% on the longer term bonds at this point in time.
Isn't the third quarter the best quarter every year? Isn't it the best quarter, whether for equities or for fixed income? That's for business generally.
Yeah,
because it's the middle line between the first quarter, when folks are just scratching about where the budget will be, where things will be, and the final quarter, when folks start taking profit.
Yeah, it's been a good quarter historically, but there's a lot happening in the economy right now that investors are going to have to consider beyond just the historical. You have to consider the FX market and what that means for inflows into the economy, what's going to happen with the naira, the rating of the country, what happens, how the fiscal and the external side look based on oil prices as well. So there's a lot more going on externally that will impact the market this year than maybe has been over the past couple of years.
Inflation is not one of those.
The inflation expectations obviously are not really being factored into market yields at the moment, and maybe it's more of an expectation that over the medium term, once we go to next year, you expect it to level out a bit. But right now, inflation of 15.6 is not being reflected in prices. Even if you look at the average bond yield, what you see is that the real return is still negative. But market expects that, seemingly the market expects that going forward, inflation should trend downwards, and then the yields will look.
If you look at the secondary market, let's leave the DMO just for a few seconds. If you look at the secondary trading, where do you think investors are piling some actions? Again, considering where we are with regards to inflation, where we are regarding interest rate, headline interest rate ahead of next month, this month's MPC meeting, do you think investors are buying more into a bit of a short term or medium term or long term?
It's more the shorter end of the curve, and I'm thinking up to about the mid tier, so about up to the 5-year bond. You see that 2020 bonds. Yeah, you see the activity there has forced yields downwards, even as the stop rate on the 1-year T-bill is higher than the trading yield of at the last auction. The stop rate of the T-bill is about 14.99, which is actually higher than the trading yield on the 5-year bond at this moment in time, which shows you the level of demand at that section of the market. Because as you go further up the curve towards the 10-year, the 20-year, the 15-year bonds, what you find is that yields are a lot higher at that end of the curve. But the short to mid range right now is where you've seen a lot of the action.
Do you think the new currency market has become a major factor of investing in FGN Naira-denominated bonds?
It will be. It will be. It depends on how foreign investors see it. Because at the moment, our market is dominated by the domestic investors, and it's been played out when you see what happened with the JP Morgan index, the exclusion, and not much impact in the market. So right now, our market is dominated by domestic investors. But if you look at the futures market and what that brings into play, hedging for foreign investors, and the fact that they can come into the market and be assured of the price they are leaving the market, what you might see is you might start to see a lot more interest from the foreign side in FGM bonds, which we would expect inflows over the medium term.
When the foreign investors get in the game, because we've created an FX market down there, I'm sure those of you who crunch the numbers on a daily basis would expect things to change a little bit, because those foreign FPIs don't just come in and sit down. They are game changers.
Yes,
we know that.
That's over the medium term.
Over the medium term,
you definitely see some inflows as the market starts to roll and there's more.
But in terms of yield, as well.
No, that's what I'm saying. When that happens, it will force yields downwards, obviously, because that money comes in the market and it demands, and that extra demand is going to force yields downwards. But at this moment in time, we don't see those inflows coming in substantially to force yields down. Not even in this quarter.
Not in this quarter. When are you looking at? Early 2017.
Early 2017, yes.
Really?
Yes.
Okay. Thank you. We appreciate your comment.
Thank you.
From Meristem Securities, Jolomi Odonkaro, who is the fixed income market lead. You expect to see more of him on the program in the days and weeks ahead. Okay, let's recap for you. We're going for the last, for the first weekend in July. That's 13 today. The markets has been shaved off by 2 days next week, Tuesday and Wednesday, by the Ramadan fasting period declared by the government. So the market will have just 3 days session next week. But you need to consider what lies ahead. After we're done with the holidays, then we'll get to serious business. Inflation data, second quarter GDP, second quarter earnings, especially from the big banks, were in expectation. Also of Oando's and Skybank's outstanding 2015 numbers will start in the third quarter. We are yet to see the financial statements of Skybank and Oando Nigeria PLC on the street. We're looking into that when we get back to you on Monday. And don't forget, the manufacturing data for June is out today. FBN Quest says the report shows a recovery, a slight one back to neutral, 50.2 reading from 48.2 in the month of May. Workforce and new orders were the best of the sub-indices. 3 others were negative. We'll look at all this together when we get the central bank PMI own reading in the days ahead, perhaps in a week or two. Then we'll put them together. Don't forget, next week, sometime next week, by the middle of the week, we should be seeing the sales managers index, what we call the SMI, also on the street. Keep your eye here on Channels Television, and do have a great weekend. I am Bosun Amofai. I'll see you really soon on the other side of the weekend. Enjoy yourself. Enjoy your holiday next week. And let's get back on Monday and continue the conversation. You know where we are on social media. Bye for now.